everyone, I am Abigail Suwal Buhian. Ever wondered how money moves from your wallet to the world? Let's talk about 10 cool facts about the financial system in simple terms. Fact number 1. The financial system keeps the economy alive. Just like your heart pumps blood, the financial system pumps money through the economy, keeping businesses running and people employed. Fact number 2. It connects savers and borrowers. So why? People who save money deposit it in banks, and those banks lend it out to the others who need cash, like businesses or families buying homes. Number 3. There are two types of finance: the direct finance and indirect finance. Indirect finance, borrowers get money straight from investors, like when a company sells bond or stocks. In indirect finance, banks and other financial intermediaries act as the middleman. Fact number 4. Financial intermediaries are the middlemen. So why? These are institutions like banks, insurance companies, and investment funds. They collect savings from people and lend it to those who need it, safely and efficiently. Fact number 5. The government is both a saver and a borrower. So why? The government can lend money when it has extra funds, but it also borrows when it needs to build schools, roads, and hospitals. Fact number 6. A strong financial system helps the economy grow. So why do you say so? When funds are used wisely, like for business, investment, or innovation, it boosts productivity and creates jobs. That's how economies grow. Fact number 7. The financial markets trade instruments. Financial markets are where securities like stocks, bonds, and currencies are bought and sold. These markets help companies raise money and give investors a way to earn returns. Fact number 8. So, financial system manage risk. Insurance companies, banks, and investment funds help people and businesses manage risk, whether it's accidents, economic downturns, or losing investments. Second to the last fact. So, fact number 9. It connects the whole world. So, why it connects the whole world? Because money doesn't stay in one country. International banks and market link savers and borrowers across borders, funding projects and businesses worldwide. Last but not the least, fact number 10. You're part of the financial system. Yes, you are part of it. Every time you deposit money, use a credit card, or even buy online, you're part of the global financial system. Cool, right? Money moves the world. Now you know how. So next time you see the word finance, remember, it's not just for bankers, it's for everyone. Follow for more finance facts. This is Abigail Buyan. See you in the next video.
Hi everyone, my name is Mary Jean Butor, and today I want to share something that might just change the way you think about money.
Did you know the financial system is more than just holding money? It actually plays a huge role in how our economy works. Let me give you 10 facts about how the financial system functions. First, the financial system channels the money to people or companies who have extra funds to those who actually need it. So instead of money just sitting around, it gets invested and used productively. Economists say system provides three key services: risk sharing, liquidity, and information. These three make investing, borrowing safer, easier, and smarter. Risk sharing means reducing the chance of losing weight. When you invest through the financial system, your money is spread out, so you don't depend on just one source. This is called diversification. Your wealth is split across different assets like stocks, bonds, or funds. If one goes down, another can balance it out.
Financial intermediaries like banks play a big part. They give savers to hold diversified portfolios, reduce risk, and even fund innovative projects that push economic growth. Next, we have liquidity. Basically, how quickly you can turn an asset into cash. Stocks and bonds, super liquid. Real estate and cars, not so much. Financial markets make assets more liquid because you can easily buy and sell things like government bonds or corporate stocks. That's why large company stocks are so attractive. Securitization is another way the system boosts liquidity. It turns things like mortgages and loans into tradable securities, making them easier for savers to invest in. Another service is informations. Banks collect data about borrowers to predict if they can repay. Since banks specialize in this, it saves time and cost compared to doing it yourself. And lastly, financial markets share information about the prices of stocks and bonds. This helps investors decide whether to keep investing, sell, or expand. Without good information, the financial system wouldn't work. So next time you think banks just store money, remember, the financial system keeps the economy moving by sharing risk, providing liquidity, and delivering information. And that's what makes it so powerful.
So, good day. I'm Mikuri Benito from BSA 3B, and I'll be discussing the nature and impact of transaction and information cost. So now, let's start. So for the transaction cost is they are the expenses involved in making a trade or financial transaction. For example, is the brokerage fee when buying or selling a financial asset. So in short, with regards to transaction cost is it is the cost of doing the deal, not the product itself. So for the information cost is these are the costs that savers or lenders pay to gather and verify information. It's like checking if borrowers are trustworthy or ensuring that borrowed funds are used properly. So what are the impacts of both transaction cost and information cost? So these costs savers earn lower returns and borrowers pay more for loans. This makes the financial system less efficient, but it also creates opportunities for innovation, especially for institutions that can find ways to reduce these costs. So now, what is the role of financial intermediaries? So the financial intermediaries such as banks, they may come in to help reduce these problems by gathering and analyzing information, monitoring borrowers, using technology to process loans efficiently, and taking advantage of economies of scale to lower costs. So through this action itself is intermediaries make financial transaction faster, cheaper, and safer, improving the overall efficiency of the economy. Now, I will indicate the 10 facts about transaction and information cost. So this is the 10 facts about both costs. Now, in wrapping the nature and impact of transaction and information costs, both costs affects how money flows between savers and borrowers. By reducing this cost, financial intermediaries strengthening trust, promote efficiency, and support economic growth. So that's all. Thank you for listening.
Have you ever wondered what happened to your money after you deposit in a bank? Or where businesses get funds to grow? This is where financial intermediaries comes in. Financial intermediaries is an institution or entity that serves as a middleman, connecting the entities that have excess funds to the entities that need funds to facilitate financial transactions. I am Pauline Espesologo and I'm going to give you 10 facts about financial intermediaries. Fact number 1. Financial intermediaries act as a bridge between savers and borrowers, allowing the money to flow smoothly through the economy. Facts number 2. Common examples include banks, insurance companies, and investment funds, all of which handles monies in different ways, such as this. Fact number 3. They help to reduce risk by pooling money from many people and spreading it across different investments. Fact number 4. They provide liquidity. It means the depositor can easily withdraw their money whenever they need it. Fact number 5. Financial intermediaries promote economic growth, providing funds that businesses use to expand and create jobs. Fact number 6. These institutions earn profits through interest and service fees. For example, banks pay low interest on deposits but charge higher interest on loans. Fact number 7. They encourage saving and investment, giving people a safe and reliable place to keep their money. Fact number 8. Many financial intermediaries offer financial advice and services, helping people make smart decisions about their money. Fact number 9. Banks and other intermediaries help create money through lending, which increases our overall supply of money in the economy. Fact number 10. They are regulated by the government to protect the consumers and keep the financial system stable and trustworthy. And that's all about financial intermediaries. I hope you learned and understand something about it. Thank you for watching!
Today, let's talk about something that keeps our economy running smoothly, the financial system. Don't worry, I'll make it simple and interesting, so stay tuned. So here are the 10 facts of introduction and structure of the financial system. First fact, what is a financial system? It's basically the entire networks that connects people who have their extra money with people who need money to grow their businesses or projects. Fact number 2. The main goal of the financial system is to move money efficiently from savers to borrowers so that money is always working, not just sitting around. Fact number 3. The financial system has 2 big parts. First is the financial institutions like banks and insurance companies. Number 2 is the financial markets, where stocks and bonds and currencies are traded. Fact number 4. These work together using the 4 key components: institution, market, instruments, and services. It's like the wheels that keep our economy rolling. Fact number 5. Financial institutions are the middlemen. They collect money from savers and lend it to the borrowers. So yeah, they make the connections happen. Fact number 6. Financial markets, on the other hand, are where buying and selling of financial assets happen. Just like in the marketplace, but instead of fruits and veggies, they trade money and investment. Fact number 7. There are 2 main types of markets. First is the money market for short-term borrowing. Second is the capital market for a long-term investment. Fact number 8. In the Philippines, the financial system is regulated with BSP or Bangko Sentral ng Pilipinas, the SEC or the Security Exchange Commission, and the Insurance Commission. They make sure that everything is safe and fair. Fact number 9. A strong financial system means a strong economy. It supports jobs, businesses, and national growth. And finally, fact number 10. The financial
another country can even affect us here. That's how powerful it is. So, that is the introduction and structure of the financial system. It may sound complicated, but it's really just about how money moves, grows, and keeps the economy alive.
Ever wondered where money goes and how it works in the Philippines? I'm Graceline Mariti Baginang, and today we will be breaking down the Philippine financial institution into 10 quick facts. Fact 1. Financial institutions are split into two major groups. First is banking institution and the other one is non-bank financial institution. Banks can accept deposits from public while non-banks generally can. Fact 2. Not all banks are the same. Universal banks are the most powerful. They can do everything a regular commercial bank does. Plus, they can act as investment houses and invest in other companies. Fact 3. We have banks especially for our countryside, rural banks, and cooperative banks. They are designed to provide loans, financial services to our farmers, fisher folks, and local entrepreneurs. They are all grassroots growth. Fact 4. The Land Bank of the Philippines has a special mission. While it is a full-service bank, its primary goal is to support the country's agrarian reform program. They are the main financial arm for our farmers and fisher folk. Fact 5. Did you know that we have an Islamic bank? The Al-Amana Islamic Investment Bank operates on Sharia principles, which means no interest-based transactions. It focuses on boosting economic growth in Mindanao. Fact 6. Now for non-bank institutions like investment houses are the hype men for big companies. They help corporations raise money by underwriting and selling their securities or stocks to the public. Fact 7. The pawn shop you see on the corner, it is a non-bank financial institution. Pawn shop or sanglaan provides a quick loans using your personal property like jewelry as collateral. Fact 8. Your SSS, GSIS are also financial institutions. They are government non-bank institutions that manage the social security protection for private and government employees, respectively. They handle your retirement, disability, and also death benefits. Fact 9. Dreaming of your own home? Pag-ibig Funds is your friend. Is another government non-bank financial institutions that provide savings program and the most famously affordable housing loans for Filipino workers. Fact 10. When you invest in a mutual fund, you're pooling your money with other investors. A professional manager then invests that big pool money into a diverse portfolio of stocks and bonds. It's a great way for beginners to start investing. And that's my 10 facts wrap up on the Philippine financial institution.
Good day everyone, today we will talk about the evolving financial system and regulatory framework. How our money banks and technology are changing the way we live and do business. Number 1. The financial system today is rapidly evolving due to digital transformation. Traditional banking is shifting toward online and mobile platforms, making financial system more accessible to everyone. Number 2. Cashless payment continue to rise as more people rely on e-wallets, debit cards, and QR codes for everyday transactions. This trend pushes the economy towards a more digital future. Number 3. The Bangko Sentral ng Pilipinas or BSP plays a key role in adapting financial regulation. The BSP ensures that financial institutions that stays compliant and secure in the digital age. Number 4. financial technology, or fintech, is reshaping the way people borrow, invest, and save. This company introduced innovative solutions that compete with traditional banks. Number 5. As system becomes more digital, cybersecurity becomes a top priority. Regulators now require strong data protection to prevent fraud and online scam. Number 6. Financial inclusion is improving. Even people in remote areas now have access to banking service through mobile application and digital accounting. Number 7. Sustainable finances is gaining attention. Banks and investors now consider environmental and social impact before funding major projects. Number 8. Global financial regulations are also evolving. Countries are working together to strengthen the law against money laundering, tax evasion, and other illegal financial activities. Number 9. Artificial intelligence and automation are being used to improve efficiency. From fraud detection to customer support, AI helps the financial sector operate smarter and faster. Number 10. Lastly, financial education and awareness are being promoted nationwide. People are encouraged to learn how to manage their money wisely and stay alert against online fraud. As the world continues to charge, our financial system regulation must keep up. The goal is simple: to build a safe, inclusive, and sustainable financial future for everyone.
Now, have you ever wondered who's keeping a close eye on the financial gears in the Philippine economy? Today, we're diving into the essential concept of financial stability and the biggest risk currently facing the system. So think of the financial stability like the foundation of a building. If it's weak, the whole structure or our economy is at risk. So let's jump into 10 critical facts that define the vital assessments. Our first fact is the mission statement. The primary goal of the financial stability focus is to prevent risk before they become systematic within the Philippine system. It's all about being proactive and not reactive. And how the expert measure this? Fact number 2 tells us that financial stability analysis uses current risk and vulnerabilities as the main baseline for entire assessment. They look at what could go wrong. Now, let's look at the threats. The rising tide of the global and local debt. The most direct concern is rising debt levels in the system. That's fact number 3. And the fact number 4 explains why it's so painful right now. The combination of increasing interest rates globally and the depreciation of emerging currencies like peso against the US dollars is dramatically raising debt servicing costs. This debt issue is very visible in the corporate world. Fact number 5 concerning corporate leverage. The debt to equity ratio is listed. Firms has nearly doubled, rising from about 45% in 2008 to an alarming 87% by June 2018. These firms are relying heavily on debt to fuel their growth, increasing the risk profile. Fact number 6 is that our first set centers on what we call the 3 R's. The biggest drivers is the normalization of U.S. monetary policy. When U.S. interest rates rise, it acts like a magnet, incentivizing global capital flows to shift towards the U.S. The movement directly affects our own assets and currency prices here in the Philippines. Moving to fact number 7, a slowdown in the global growth and declaration of internal trade are noted as factors that will undermine the growth of many economies, including our own. Fact number 8 reminds us that the simple presence of higher debt levels globally leaves all economies vulnerable. Why? Because it amplifies the impact of any changes in the global growth outlook and the continuing rise of interest rates. Finally, let's zoom on the structure of the local credit markets, where the money is coming from.
Fact number 9. This confirms a core strength and the key risk. Peso-founded intermediation dominates the Philippine financial system. That's good. However, the domestic funding is also supported by essential foreign currency or FCY sources. And the fact number 10 is that total loan portfolio of the Philippine banking system has increased significantly, and thankfully, this massive growth is mainly funded by local peso deposits, showing deep local liquidity. And that would be all. Thank you.